Monday, May 12th, market analysis, Stan Ehrlich. Good morning. 9:45 California time, smack in the middle of the normal trading time frame, 9:30 to 1 o'clock California. We're going to start out with stock market indexes like I always do and go to futures. And we've got a variety of good stuff today to talk about because we have gap up markets and the indexes and a few others gapping up and down also today, this morning, even over the weekend in the futures contracts. Gaps are almost always closed. There are four types. There's the breakaway. There's a midway gap, very difficult to discern at the time. There's the exhaustion gap, which I think we have a bunch of today. And there's a common gap, which has no other explanation, but it's there, and there's no, it doesn't fit in any other descriptions. So if this is an exhaustion gap, we also have gotten up into the resistance area that I talked about for weeks. In fact, the high of the day made early was right at one of my resistance lines around the high of the resistance area, and that almost matches exactly the low between two or three highs. In other words, the depth of a previous top formation, which worked already. So this is a profoundly important resistance level that we hit, not necessarily since 6:30 this morning, but maybe last night. Not the point. We are currently trading well below the high, not a lot, considering the fact that we are up 16 full spider points, or 160 E-minis. That's a lot. Very substantial. You're going to see a move that size normally only once every couple of months, maybe even a little less often than that. In the last couple of months, we've seen several of them, but if you take into consideration a couple, 3-4 years or something, they really don't happen that often. We've just had an increase of volatility, substantial amount for obvious reasons, in the last few months, because you know who. Anyway, I think we hit a high today, this morning, and I'm going to go through other charts to show you why. Let's take a look at the 1-minute chart on the E-mini. We're coming back up again pretty quick at the moment, but that's how little rallies stop. They go up too fast, too quick, and so wouldn't surprise me. Even if it makes a new high and a closing price higher than today's high, a lot of what I'm saying I think is going to be very relevant. Particularly the upside gaps we've got, and all of them are in overbought conditions. Next, spider, overbought, big, huge up gap. I didn't bother to put my marker from the high of Friday to the low of this morning because I think the market could, S&P, rather SPY, can make new lows for its session yet today. We'll see. And God forbid if it were to drop all the way below Friday's lows, which I don't expect, but anything goes here. We would have a gigantic red bearish engulfing sell signal that I might have to talk about for weeks and weeks to come, but I don't think that's going to happen. Next, it's just hanging in there after the opening rally high in the first minute or two. Next, QQQ, same story. Although it did get a little bit above, and it's still staying above, that resistance area that it got to that I talked about in the last couple of weeks, I thought that might happen. So this is a little stronger than I'd like, but the overbought condition, I think, is a more profound situation as well as this huge gap. Next, 1-minute charts, up against a tiny bit of resistance for today's secondary high. Next, hit a resistance area on the NASDAQ futures. And there is a small gap on the NASDAQ from Friday's high to the low of the session, which was Sunday afternoon. You don't see that happen that often. A little while back we had one happen. But even the futures don't gap very often over the weekends. But this did. It hit resistance. It got overbought. We are floundering. Here's the high. Early in the morning, California time, 12:30 a.m. Big rally happened at midnight sharp across the board. Since then, slightly higher highs, then some low lows, and that was this morning at 7:30, an hour after the opening. And now we're coming back some. So it's very important. If we cannot hold and do not hold 20,700 on the NQ futures contract, that would be fairly negative for the balance of the day and or maybe a day or two more. But remember, there's a big gap, or rather a small one, but a gap. Next, here's the gap in the YM. Hit resistance, got overbought. What can I say? Stalling out up here. Some are doing a little better than others. The Russell has come down quite a bit after getting up to resistance area again, poking through it a little bit. Right away it didn't hold. And now we're below the middle of the resistance area, and there's a gap to close. Here's the Russell. 1 minute. Little rally at the moment. I think we're maybe close to a little rally high here. All right. Bonds. New lows. Not terrible, but I'm still expecting that 112.20 down to approximately 111.17 is going to end up producing a bottom. But it remains to be seen. I've got to look for slightly lower lows until I see oversold conditions, which I don't have yet, allowing some more elbow room lower. There's no particular significant support area that I would want to point out. Well, maybe a little bit right here around 113.03, 113 flat. But I don't think that's going to be enough. Looking for slightly lower levels, but I am still long-term, long-term bullish because of the possible double bottom. Same thing for notes. A much better looking double bottom, January of 25, and was that October of 23. Two lows are almost the same price. Gapped down, so therefore a gap to go back up and close for the notes. It might slip more before that rally happens, if it happens. It's not guaranteed. Gaps are usually closed. That means 51% of the time or more. And it's a lot more than 51% of the time. I got to tell you, probably more than 80, maybe even more than 85, close to 90, somewhere in there. Crude. Strong rally, not overbought, getting into resistance. Good likelihood, in my opinion, that about 64.5 is going to stop the bounce here, and then it's going to turn down, I think. But let's get up there, and we're mostly there already. We did get a buy signal on the 8th of May, which has worked great. The next day, Friday of last week, made a progress and made a lot more progress today as well. So that's been, past tense, a good, damn good buy signal. I should put a circle around that, or an oval. Next, also I should put an oval around the new buy signal on Thursday of last week that worked out on Friday okay, and much, much better today, but now heading a little resistance, almost exactly at the rally high today, and pulling back slightly. I think we're going to go through. I think we're probably going to get up to 2.28 or so before any big correction happens. We're not overbought yet, but the buy signal on Thursday has, past tense, now offered you plenty of elbow room to do some good. Next, natural gas. We have an outside down day today, a bearish engulfing at the moment. Not particularly aggressive, a little over the high of Friday, a little bit under the low, just barely the low of Friday. And it is lower on the day significantly. So we have a bearish engulfing. Doesn't look particularly important, but it's factually a bearish engulfing if the data is correct. As a result, if it stays lower on the day, I'm looking for a little bit more of a dip here. This changes things for the moment. Probably down to about 3.427, 3.427. And I wouldn't rule out a little bit lower than that as well, 3.265-ish. Next, gold has hit a high last week. Dropped off Thursday, tried to come back Friday, and that failed. Today we're much lower than, it looks like every low all of last week. So now we're challenging the lowest low for about a month. Looks like that's going to get broken. We are nowhere near oversold. Next stop on the way down, and this was my first one, we're just testing what happened already on May 1st. So I think it's going to make lows lower than today's lows. Next stop down should be about, a little under 3,000. Next. Outside down day in silver. Also telling me it's going to start to work a little lower. Resistance levels seem to have stopped it. Support seems to be challenged or getting very close to being challenged. If I'm right, like in gold, next stop down should be beginning to support at 31. Then maybe 30.30. And then probably 29.70. And maybe lower. If you get lower than these important lows here in early April, that could be pretty bearish longer term. Next, platinum. Also an outside down day, bearish engulfing. But we're not overbought, so it's not red. Now, first stop down, probably between 955 and the beginning of the support at 949, let's say. And if that doesn't hang in there, then we're going to get to the bottom of that support area, which is fairly significant at 929.5. And then watch out below after that. Could get pretty bearish. Next, doji and copper, doing a lot of nothing, a little bit lower on the day. Dojis imply uncertainty, lack of higher highs, lack of lower lows. Maybe a little higher or lower closing prices, but it basically means I'm not sure what to do. So because of the resistance that stopped the rally a couple of 3 weeks ago, and Friday's lower low for the trend since, today doesn't do anything. I think we're going to still get lower again. So I'm looking for another test of 448, and frankly, 4.44 probably is going to get tested and maybe even broken. I'm not going to be surprised at all if it gets down to 4.17. Can't rule that out. I think there's a good chance of that. Then we'll probably be oversold and start to bounce again off of the same support level that has proven to be pretty good historically, going back 3/4 a year or something. Next, we've got in grain some very encouraging strength. You know, I've been talking about the grain markets for a long time in terms of trying to support a bullish story. Today, we're getting some significant increase in evidence that that bullish story is a little more likely to turn out to be correct in the end, which is many months from now. We have a higher high for the trend up in soybeans today. We are currently holding at previous rally highs for this rally so far, and it's the highest high since the middle of February. March, April, 3 months. Good. 1/4 of a year. So we just need to stay here and climb a little more. We have a short-term, intermediate-term upside breakout. The next stop is going to be pressuring the neckline for the first time. And that's at 11:0567. Let's call it 11:07. Give or take a penny or something. That is critically important because if it's broken on a closing basis, especially on high volume on a classic upside breakout, we're looking at an upside objective of way up to 1240. That's going to take all summer, I would think. And you two things I have in mind for a long-term bull move: increase in demand and maybe weather problems at the same time. which is exactly what happened with the Russian grain deal, by the way, in the early 1970s. I lived through it as a commodity futures broker. We'll see if this develops correctly. I like a lot what I see today in soybeans. And we're getting some rally of significance in soybean oil at the same time. Now remember, soybean oil already tested the neckline once, and that was back on April 25th. Settled back down into some support, bottomed out last week, and now climbed very quickly as high as today's high, which is almost up to the neckline again. We break the neckline in soybean oil, the same story goes. All the breakout level, high volume, big sharp rally, maybe even a gap across the neckline would not be uncommon. Upside objective 62.70, and we're 49.5. Big move if it works correctly. And that's the double shoulder, head and shoulder bottom I've been talking about forever. Next, soybean meal has a bullish engulfing today. Today's a new high for 5 days. That does not turn me on. That's no big deal. But if we can get up to and close above 300, I would raise at least one eyebrow, because that's starting to get into resistance and a new high for 3 weeks. We really need to get above 310. That would cause me to be very excited, like I am talking about beans, oil, but meal just doesn't have it yet. But today could be the start of something, a bullish engulfing. I just wished it had gotten oversold so I could get a green buy signal out of it. Next, we got corn, which has been doing badly. It made a new low for months since November, December, just Thursday of last week. Friday came back up a little bit, coming back into the same trading range it held in before. And today, up a little bit more, but I'm not getting any kind of aggressive rally. I am oversold. I would have loved to have seen the low today lower than Friday's low, and then we would have a bullish engulfing buy signal green, like we did on March 28th, which worked great. But we're not getting it so far. Now, I have a few more days with the time to get a bullish engulfing out of this, because it's currently oversold, at least for the last few days. So we'll see what happens. That would be great. I can't really sit here and tell you last week's low is the low, but I'm a little suspicious, the best I can say. We did make a lower low today in wheat for the whole trend down. Yep. And so far, it is down a couple of pennies and not responding. We're not oversold, although close. This looks miserable so far. I can't come up with anything bullish to say, frankly. We just got to start to rally. I just got to get the right kind of price action going. Otherwise, it ain't. Therefore, you got to be either a neutral or bearish, and I have to be bearish because the trend is your friend, and I'm sorry to say, wheat's the only one at the moment that's not causing me any optimism. Cattle, overbought, gapped up, possible upside exhaustion gap, prime territory for a reversal, for a top in the market, should be coming extremely soon. This week I would expect probably not much higher, and today could be the day. I just can't say that at this point. Anytime now. Hogs, gapped up, should come down a little bit, but not overbought, not even close. It's just a little common gap here, or maybe a breakaway gap to the upside, but none of those really fit the bill all that well. It did come down to support. It broke below it. It closed below it. Normally, that's pretty bearish, but we've popped back pretty good. So are we getting into a rock and a hard spot sideways trading range situation? Yeah, it looks like it's possible. Shell. We don't quite have a gap from Thursday to Friday. And we don't have, if we do have, it's so small it doesn't really matter. So I'm saying no gap, even if it's tiny. What we did do is we rallied up to my first objective, which was the resistance area. It's 67. And we're pulling back fairly decently. is that going to stop it for the moment? There's a good chance of that. So the next move might be down to 64.90, maybe even down to something like 63.5. There's a gap to close down there, 63.5. To be honest, 63.40 it looks like for the gap closure. Yeah, 63.45. So wouldn't be surprised if that happened. Remember, I'm trying to make excuses for the stock market to top out, and it's not doing it yet. I really have to have a significant break here in the indexes, and I notice they're climbing back up pretty close to the high of the day still. So let's see how it handles resistance on Shell. Not super optimistic about higher levels immediately because of the gap to close and expectations of other weaknesses to creep in here real quick. And we do have a big gap on Apple. It is right smack dab up against what I think could be a neckline. Perfect spot for us to stop at the moment, which it did basically on the opening and slip back down some. The slip back down closed an up gap, or rather I should say a down gap from May 1st to May 2nd. Done. But it didn't get low enough to close the opening gap from yesterday, Friday, I meant, to this morning's lowest low so far. That is still there. So coming back to Friday's high at 200.25 is still in the cards. And that begins a little bit of a support area also. But I'd like to point out something. When this market gapped back here, it was closed 2 days later. When this market gapped up, it was closed a few weeks later. When this market gapped up again around April 22, 23, it was closed a couple of weeks later. On the way down, it gapped down, kept going down, closing an old up gap, closing some other up gaps, stopped when it closed the lowest gap to come down and close. And that was just Wednesday of last week. And it's turned around and went back up and closed the gap all these gaps have been closed. It's kind of amazing. And now this morning it created a brand new one below today's low and above the high of Friday. Will it also be closed? How can I say no? I think it will. Stopping at a neckline. We're not overbought. That's a little unfortunate. If you close above the neckline, all bets are off and you go up immediately. Once you close above this neckline, you're not supposed to get below it, or even close below it would be much worse. Getting below it's not good either. So I think we got a little roof on our head at the moment. Maybe it's a thatched one that won't hold very well. No offense against thatched roofs. They've been used for centuries. But anyway, looking for a little bit of a dip here first. But this could be a shoulder, a head, and shoulder bottom. The timing was almost perfect. The last shoulder low was only 2 days later than I would have expected, forecasted, and the price level was very much in the realm of acceptability. Next, up gap in Tesla, and it gapped up and overbought, I meant. So now we have an overbought condition with an up gap. We broke out to the upside of a bottom, double bottom on Friday. Good. We are getting significant upside follow through again today. Good. Come and gone. Now the problem is you jumped into overbought conditions up against a little resistance area, which means you might even make a little bit new highs here, but gapped up. So we're about to see a minor turn down to close this gap, but maybe back down to about, 293, 291, and then up again. So possibility of slight bit more of a rally up to about 326.13. I get in trouble when I try to get the numbers too exact. And then closing the gap down and maybe back to support and then up. So this is looking pretty good in Tesla at this point. I'm actually discounting. Go away. I'm actually discounting the gap that's way down here because it is under the support level that should hold. And I'm also discounting this gap down here. So there's two gaps now below the market I don't think are going to get closed. What happens if this one does get closed at 279, 280? Well, it doesn't kill the trend. It just dives into support a little bit. But this one's way down here. That probably should not get closed at this point. And let's see about Carnava, whatever, the car selling place, Carvana. Overbought condition Thursday, hit resistance, topped out. I mentioned the possibility of a double top. I'm not so sure that's going to actually happen. Came down some on Friday and looking for a little bit more weakness because you're not quite finished closing the gap at 262.80. There's good support under this market. I don't think it's going to go too much lower, maybe 230. That's not bad, though. That's a pretty good dip, 40 cents on a $270 stock. If we got all the way down to 240 or 230, rather, yeah, 240, we might even get oversold at the same time. That's a pretty good break. So I'm still looking for a little bit more of a dip, at least. Back to the mini, up near the top, surviving at the moment, not turning around and coming down yet. So a little bit more strength, but I'm still sticking to what I said at the beginning. We could be very close to a downturn, gaps below, resistance areas, and overbought conditions are some of my favorite combinations. You have a great day and profitable trading to you.